Thinking about buying your first home, but have no clue where to start or even how much you can afford? You're not alone. In this video, I will break down step by step and show you what your budget really means here in Roseburg and what lenders are looking for and how you can increase your pre-approval. Hey everybody, I'm Jerry Norman. I am a real estate agent here in the Roseburg area. I've helped tons of first-time home buyers go from confused and overwhelmed to confident and clear about what they can afford and where and what they should be looking for. So if you're looking to buy your first home and want to know exactly how the pre-approval process works and what you should be looking for, this video is for you. So let's get on with it. All right, so first off, affording your first home just isn't about your income. It's about how that income balances with your debt. And one of the biggest things the lenders will look at is your debt to income ratio, or DTI. Here's what really impacts how much house you can afford. So first off, obviously, the lenders are going to look at your credit, and then they are going to look at your income, and lenders will look at your gross monthly income before taxes. And then they measure out how much of your monthly income goes towards your debt. So here is a simple breakdown of how the debt to income ratio works. First, we're going to add up all your monthly debt payments. Car loan, student loan, credit card minimums, which will give you the total debt payment. And then we're going to add in your future housing payment. So now you've got the total debt and the new mortgage. Now, divide that by your gross monthly income, which will give you this percentage here. So most lenders want your debt to income ratio at under 43%. So now you know what the debt to income ratio is and how that works. Here is how you can improve that. To improve your pre-approval is possibly pay off that car loan, pay off those high interest credit cards, and slowly pay off those loans. That's going to lower your monthly DTI and increase your pre-approval when you're ready to buy a home. Now we need to start thinking about the down payment. So typically the first-time home buyer is going to be using the FHA loan, and your down payment is going to need to be about 3.5% of the purchase price. And then you also have to understand that the credit score affects what type of loan types you can get. So your credit score is going to affect the loan types and terms, but your credit score doesn't have to be perfect. I've helped people with 620 and even a 600 get into a home. So there are different loan types. There's the FHA and the VA, which are both government backed. And then there's some states, and Oregon is one of only 8 states that has a state VA program. These are going to be a little bit different, and you will only qualify if you are a veteran. And then there's also the conventional loan type. And conventional loans are usually geared for people with a higher down payment and don't need a lot of closing costs paid. That's why I get you in touch with the lender right away and walk you through those numbers early to know what's possible before you fall in love with that home. So the next off, we want to find your comfort zone for your mortgage payment. So when you are shopping for a home, don't think, how much house can I buy? You should be asking yourself, what monthly payment would I be comfortable with? And once we know that, then we will reverse engineer your price range. So for example, $2,500 a month budget, we need your mortgage payment, taxes, insurance, maintenance, and HOA dues, if any. And this is going to be your whole breakdown of your housing costs and your monthly payment for that home. Now, let's break down the down payment and closing costs. So for example, on a $325,000 home, you've got your down payment, your closing costs. This will be your total out-of-pocket close on that home. Now I know this seems like a lot out of pocket, but don't stress on that because there are ways to lower that number. First off, your closing costs, a lot of times, and especially right now in today's market, we can get the seller to pay those closing costs. And sometimes we can even ask for more to buy your rate down. And then for your down payment, there are a lot of first-time home buyer programs right now that help with that down payment and some of the fees. And one of the misconceptions is that you owned a home 10 years ago that you don't qualify for a first-time home buyer. Usually, it's if you haven't owned a home in the last 2 years, you can qualify for a first-time home buyer program. A lot of people don't understand that. We would go over your full picture before we start house hunting, just so there's no surprises. So let's say you're pre-approved for 325 or even 350. I always suggest to buyers, let's start at a much lower price. Let's start at say like 250 or 285, 290 or even 300. Let's try and keep your monthly payment down. Now a lot of real estate agents, they're not going to do this because the more sales price, the more we're going to make. But that is not my goal. My goal is to get you into your first home and you to enjoy it. So let's make sure that you can really afford that home. So for example, you're pre-approved for 325 or 350 and you really don't need that much of a home. Take a look at this home in downtown Roseburg for 285. It's a solid remodeled 3-bedroom home in the heart of downtown Roseburg. So you're close to all the local shops, all the local restaurants. Great walkable neighborhood. The one problem it needs a little bit of yard work and a little bit of sprucing up on the outside, but the inside has been completely remodeled. And then also, this home here in Riddle is only $250,000. It's a 3-bedroom also. And it has also been remodeled a couple years ago. It's in great condition and a huge backyard. The one downfall is it's about 25 minutes to Roseburg. It's a great place, but the commute is not for everyone. And this is where I'm going to help you out and help you find the right fit. Not just for your budget, but for your lifestyle as well. What's good for you and your family and your kids? What schools do you want to be in? I'll help you out with all that. Now, some of the common mistakes that a lot of first-time home buyers make, or some things that they think that are not really correct. So using an online calculator a lot of times doesn't hit all the right points. It misses a lot of key facts like taxes, home maintenance that you should be saving for, because you never know, that hot water tank might go out. A hot water tank is going to run you about $1,000 for the new tank and to replace. Or what happens if your roof starts leaking? You're going to want to have a nest egg set up for those repairs because they do happen. It's not fun, but they do happen. And the next one is starting to look for homes without being pre-approved yet. You're kind of just wasting your time because you really don't know what your budget is and what those monthly payments would be for that house. It's really easy to get pre-approved. You can either give me a call and I'll get you in touch with some really good lenders, talk to your bank or credit union or whatever, and just get pre-approved for a home loan. They'll give you basically the ceiling of what you can be shopping for. But a lot of mistakes that a lot of first-time home buyers make is, let's say you're pre-approved for 325. They use the 325 as their base mark and look for things higher, so 325 to 350. This is wrong. You really should be looking at 325 down to 250. So just because you qualify for that 325 or 350 mark doesn't mean you need to shop there. Save that monthly income. You'll probably find a house that you'll like that needs a little bit of work and that you can make your own and increase the value over time. Another thing to note that a lot of first-time home buyers think is, we're just going to go buy a fixer. Well, here's the problem with that. There are a lot of criteria that go into a home that banks will not loan on. And a lot of times the seller will not make those repairs for whatever reason. Maybe they don't have the means to or whatever. But a lot of these loan types won't loan on the home because of certain problems with the home or repairs that need to be made. So if you've got any questions or anything, I've got a first-time home buyers link down below. It will walk you through all the steps. If you are just starting to look, give me a call, text, email. I help tons of first-time home buyers all over the county find their first home and help them fall in love with it. If you want a quieter neighborhood, you want to quit renting, prefer a newer home with low maintenance, whatever your criteria is, give me a call. I'd love to help you out and walk you through the process. Let's build a clear plan to help you get into that new home. Now, this process could take 3, 6, 12 months. That's all right. I'm not going anywhere. I mean, just give me a call. I'd love to help you out, work through it with you, and just put you on a plan to get you into your first home and stop renting and paying somebody else's mortgage. Because basically, if you're renting, you're just building the owner of that property's wealth up. Build yours up. So if you are ready to buy, give me a call, text, email. All that contact info is in the description below and right over here. And my social media stuff is up here. And don't forget to watch these other videos. Okay, we'll talk to you guys later. Okay, bye.